Well, it's Black Friday, and we got to talk about Symbotic, the future of, quote, robust robotics. I just did a fundamental deep dive on this company, and I want to break it down with you. Now, the stock is rebounding a bit today, so in the short term, there's probably a chance it might slow down into the closing, and there might be a buying opportunity after you get a 10% bounce on a day. But this is a more long-term focused video. Yeah, it's Black Friday. Yes, there's a sale going on at meetkevin.com for the Trump course, Trumponomics, taxes, family trust, entities, business, not just motivation, negotiations, marketing, stocks, crypto, options, trade alerts, live streams, everything, real estate analysis. It's going to be my best course ever, and it's on Black Friday sale. But I want to talk about this company. It's a robotics automation company. And what's really remarkable is they are going to be a part of, in my opinion, what will be the worst longer-term recession ever. Now, this sounds crazy because it's like, wait, if you're bullish on a company, but you're worried about a recession, that seems bad. I think the next recession will drive a lot of unemployment. And part of the reason I think that is because of robotics. Now, a lot of the robotics we see here, this is robotics that already exists. Right? These are current robotics. This is old news. Like, this company has been doing robotics for quite a while now. In fact, they SPAC'd back in 22. So it was sort of part of that SPAC craze. And as a result of that SPAC craze, they've actually come down quite a bit. Right now, they're trading for about $26.42. They were trading for as high as $64 after the SPAC craze, right as the artificial intelligence revolution began. You really saw that right around March of 23. They had a really big run, but boy, they've come down quite a bit recently, down to these lower fibs over here, in part because of a delay of their annual filing. And their annual filing is being delayed because of restatements they have to make to some prior quarter financial statements. And that sounds really scary. It's almost like Supermicro, which has been very volatile after their sort of accounting issues, which I'm actually bullish on the Supermicro valuation and will stay bullish until they get probably closer to my price target, which is $87. But anyway, Symbotic, which is so easy to say symbiotic, although it's not. Symbotic is really interesting because if you actually look at the earnings call of this company, you'll find that the restatement of these financials doesn't affect their annual numbers at all. Not a dime. In fact, in their annual report, they talk about, or sort of their latest call, you could see it right here. Before I discuss our financial results, I want to address the issue of restatements to quarterly financials. As we were reviewing our business processes and preparing our full year financials, we identified occurrences during 2024 where goods and services related to specific milestone achievements were expensed prior to the corresponding achievements. So in other words, they took an expense too early. But because it's all wrapped up into 2024, they expect no impact on their full year results, but there could be some restatements for like Q3 versus Q2 versus Q4, which is understandable. I look at this as really a nothing burger, mostly because right now the company, it's got a high PE ratio, but it's also got a really high growth rate. The PE ratio right now on a forward 2025 level is 95, which is very high. But they're expecting to grow by 69.8% for each of the next 4 years after September of 2025. That's pretty good. So when you divide that out, you're actually looking at this as a PEG ratio of about 1.36. Now, I actually did a course member live stream on this company, and we did a fundamental analysis on them before their stock crashed after the accounting restatement. Their stock crashed like 37%. So we're making this video after that crash. And now we're looking at it like, okay, well, is it a good deal now, right? So if you actually jump over to what I wrote in my course member analysis sort of summary section, because we did a live stream on this, you can actually see on November 20th, I reviewed the company. This is going to look a little busy on screen here, but don't worry about it. Over here in this corner, you'll see I posted the Q4 Symbotic earnings call with annotations and the annual report, the 2023. And we talked about how they use contract manufacturing, which I'll talk about the benefits of that in just a moment. They're hedging their exposure to prices of steel going up. But something that's remarkable is here I wrote, it's trading for a 2 peg, selling for 10x sales, not a particularly good, like not a particular deal right now, I wrote, but absolutely a stock to watch in robotics. Now, what's really interesting is now you have this nothing burger accounting error. And to me, I'm looking at that going, whoa, now there's an opportunity, because now you're not buying it for a 2 peg, you're actually buying it for a 1.3 peg. The accounting error is nonsense. I get a cheaper valuation on a good company. And now contract manufacturing, I want to say I actually really love contract manufacturing. Enphase does contract manufacturing as well, because you can sell a product and a service, but you don't have the responsibility of constantly keeping people employed in a factory and making sure the quality control is good. Instead, it's somebody else's responsibility to make sure the quality control is good, and if it isn't good, you don't buy it. So Symbotic has to issue these sort of pre-orders for parts and inventories, which can sometimes make their cash flow look a little lower. Like in this last quarter, they had some negative cash flow. And so some folks are like, oh, I don't know, but their cash flow negative. I believe a lot of that is just due to them pre-ordering from their contract manufacturer. And contract manufacturing is great, especially if you have a slowdown, because you can really quickly adjust how much you're spending. And you're not sandbagged by keeping all the people employed. You know, NVIDIA is a contract manufacturer too. Tesla, on the other hand, actually also manufactures, but that gives them kind of a little bit of an anchor. It does also come with other competitive advantages though. But this is their cash flow statement. And when you look at the prepaid expenses and other current assets section here, you can see that they've prepaid in 1 quarter, in 3 months here, almost an entire year's worth of prepaid expenses and other assets over here. So that alone right there, I think, is what sort of whacked their cash flow, which is sort of expenses going to this. But they are profitable, at least this quarter they're profitable. Expect them to be continue to be profitable. You look at a balance sheet consideration, they've got $727 million in cash, $382.8 million in debts and payables, not including obviously like deferred revenues, because you know that's part of the cash that they have now, so they have to offset that until they earn it and then pay taxes on it. And then about $450 million in accounts receivable and inventory. So I think you're a very well capitalized company. I think the balance sheet is very strong. But something that makes me very excited too is their partnership with SoftBank and how they're controlling costs. Both of these are a game changer, in my opinion, and they make me pretty excited about the company. Now, I'm also very excited about the Trump course, which is on pre-sale today until December 17th. Really, learn more about that. Just go to meetkevin.com. Watch the video where I talk about the Trumponomics course. Somebody left me a comment the other day. They're like, "How you don't have a crystal ball. How do you know what Trump's going to talk about?" Well, I don't, and that's why I actually wrote that I expect 70% of the course to be live December 17th, and then another 30% to come out throughout 2025 as Trump's strategies and plans become a little bit more clear for laws that might get passed or whatever. Then we update the course with that information, so we get to work together on it and come up with plans for entities and trusts or whatever. I really think this is a course for everybody to have, especially at the price it is. It's very, very reasonable. You pay once, you get lifetime access to this Trump 2025 course, and it's good for beginners, good for advanced. It's just going to be good for everybody. It's going to be speed you right up to where you need to be. So look at their expense management at this company. So you look at expense management. What you actually have is you've got a company that is growing revenues year over year by about 55%. We expect earnings per share to grow by 69% per year, which is remarkable. And part of that is because they're just cutting their SG&A, but they're still growing. Over the last year, they shrunk SG&A by 12%, and they still grew 55%, which is remarkable. And it somewhat implies that maybe these products are really selling themselves. And one of the other ways that they're trying to sell their own products, well, there are actually 2 ways. One is with SoftBank, and another is through acquisitions. See, this company just acquired this company called VOBot, and they mentioned in their earnings call that they're open to doing more acquisitions because they think there are a lot of opportunities in robotics right now. And so they just acquired this small private company called VO Freemove. It's basically a LiDAR-based company that helps robots not kill the humans that they're working with. That's just like the really quick TLDR that I take away from this. And Symbotic now owns this company. Now, VO is a private company. Well, possible human, minimum distance to hazard, whatever. So by acquiring this, they actually increase their pricing power and their moat. Now, that actually is why I'm so excited, like ridiculously excited about robotics, that I've actually created a VC around this. It's robohack.ai. We're limited to 99 investors right now. So if you want in, sign the DocuSign. We will text you more information this weekend. If you sign a DocuSign, by Monday, we'll text you more information. And we're only going to be able to pick 99 accredited investors, but we expect 20, probably closer to honestly like 40 to 50% of our investments to go into robotics. And then we'll have money going into space exploration, nuclear energy, quantum compute. This will just be private. Like this is venture capital, right? Private world. But very, very excited about what's going on with robotics. But anyway, so they acquired this company, but not only did they acquire this company, if you jump over to their agreement with SoftBank, this is really interesting. They want to come out with something called warehouses as a service. So WAS. Okay, this is Symbotic. Warehouses as a service. Basically what they're doing is they're buying this massive factory for like $125 million, well, warehouse basically, outside of Atlanta, Georgia. And they're partnering with SoftBank, not a bank, the investment group, and they are taking a 35% ownership of this green box warehouse as a service facility. But with the partnership of this, SoftBank agrees to help pay for over $7.5 billion of robots from Symbotic. So like if warehouse as a service works, great, Symbotic gets 35% of the upside. But SoftBank is taking 65% of the risk, while Symbotic gets to manufacture the robots, sell their robots to this facility where they could basically do like Amazon fulfillment, but not through Amazon for companies. And they actually think by doing this, they'll sell more of their robots because people will see this and they'll be like, oh, this is such a good warehouse as a service. We not only want this for ourselves, but we want to buy your robots to make it happen for ourselves. So they see this as an ability for companies to reduce inventory and costs. It's like contracting out your warehousing to robotics, right? SoftBank does get shares in Symbotic, so there's sort of this mutual relationship as long as SoftBank is paying for those robots. So there's some conditionals there. You could read those details that were on screen. Another thing that was fascinating, which actually came up in the earnings call. Let's find my earnings call here. In the earnings call, I want to get to where they talk about vision. Take me just a moment to find it. But when they talk about vision, what they do is they say like robotics today, they're not really there yet without vision, that they're kind of blind. And the problem is with that is what happens when products break or spill or whatever, the robots don't have vision. And so what they're doing now is they're introducing vision technology and artificial intelligence to the robots, and then they're selling a software that they make like 50% margin on, which is great. And there's the play, right? So now you're acquiring companies like Veo so you can have the LiDAR-based vision, train the robots on what to do, and really take the entire robot fleet they already have, improve it, sell more of the software, but then also make it easier to sell more robots in the future. This is where they talk about green box, how they think it'll be a couple years before they actually build that and they get the WAS up. So, potentially kind of getting in early. Obviously, the big downside of Symbotic is if growth stalls for robotics, you're going to have a problem. I just don't see a future, even in a recession, or like if there's an AI crash, like NVIDIA slows down or whatever, I just don't see how warehouse robotics doesn't keep doing, good. But I could be wrong. I could be really wrong here. I want to buy this stock. I do not own this stock right now. I do not have any call options or puts. So I don't have anything on this right now. I have literally zero exposure to this right now, but I want to buy. They talk about, this is interesting too. They talk about Walmart Mexico and sort of backlog, how even though they didn't add any to their backlog this quarter, they expect to add to backlog in the next few quarters. And really where they get very excited is not only about hedging themselves against steel costs, but they get excited about some uncertainty in warehousing being removed after the election, but specifically what's going on in South America. They think that as they're able to expand with these products to South America, they're going to be able to explode their total addressable market. And what's crazy, they think, is if they can control their factory robots with vision sensors, they could basically remotely control the robots from anywhere in the world, which basically means you could hire very, very cheap labor in like Indonesia or India or the Philippines or China to supervise your robots in factories at local distribution facilities close to the end customer that are all being run by robots using vision-based AI. You know, they're only doing 2 distribution centers right now for Walmart Mexico, and they have like 40 or 50. So they're like, yeah, you know, there's going to be competition, but our TAM could literally be ridiculously huge. And so they think by doing the WAS model, they're going to be able to really demonstrate what their total addressable future market is. So this is pretty exciting. I think the upside in the valuation comes a lot from not only increasing robotic sales, which they're not even pricing in right now, but it also, I mean, a lot is already priced in, right? But I'm saying like in South America or whatever. Let me make sure. Yeah, okay, that's still good. But I think a lot of their enthusiasm comes from software as well. So if this company, as a contract manufacturer, can start demanding a higher peg, the valuation here could balloon. I'll run a price target analysis on it. So I'm going to go for 2027. And what I'm going to do, let's get this ready together here. Okay, so for a future valuation, I'm going to take a future peg. I mean, right now we're at about 1.36. And then we're going to use a future peg formula on 2027 numbers. I'm going to give you Wall Street based on my pegs. So Wall Street would have us at 85 cents in 2027. I'll give them a 50% growth rate, which is high. That's going to slow down. That's down from the 69%, right? And then I'll give them a 1.67 peg. So I'm going to reduce the growth rate just to be conservative a little bit. I'm going to go with a 1.67 peg, which basically doesn't account for software at all. And to me, this is a $71 company with those numbers. So $71 company 2027. It's trading for $27 right now. Then, and that's on the more conservative non-software valuation basis. If I stick with the 69% growth, which might be a little aggressive, but maybe not, because that's when the WAS will come out, growth could explode. If I stick with 69% growth, I go 1.67 on the peg, and I go with the earnings of 85 cents. 2028 targets $98. 2027 target is $98. The 2028 target, $1.50 is the current Wall Street estimate, times 1.67 times, I'll go 50% growth again. It's $125. So I think there's a lot of upside. I'm going to say my price target's probably here between 70 to 98 because I like to stay conservative. And so I think that's a low target. But I'm going to go with 71 to 98 bucks on this company. And I think they're recession resilient. So this is really exciting to me. So I do have also a little bit more from the company on, also just to make it clear, this video is not sponsored by them. No, it sounds like I'm very bullish, but that happens. There are creators who get sponsored by stock companies and to pump the stock. And I'm like, well, that's disingenuous if you don't disclose that. So I just want to disclose that I am not. Although I'd love to tour their factory, honestly. If I could get a tour of what they're doing, or, you know, well, they're contract manufacturers, or even just where they've deployed some, that'd be sick. But here's just an example of a warehouse robot that they're working on now. This is sort of their next gen robot. Here's one that they have on, they have one version that's on rails right here. These are kind of like robotic forklifts, right? And then they have another version that is sort of like your Amazon bot that can rotate and pivot and drive around like a forklift on the floor. So kind of cool. I mean, there's a lot of stuff you could see here when you sort of just click around on their website. I generally don't love watching marketing videos, but they talk a lot about their robotics, and basically they compare it to full self-driving in cars, except I actually think these devices have a better chance of going far further faster than full self-driving cars because I think the regulation is easier, but you're also in a controlled environment, right? Like when you're in a controlled environment, you don't actually have to worry about some random guy running a red light. You're in a factory, so you have less poopies to worry about. Anyway, that's my take on Symbotic, ticker SYM. Sorry, I'm bullish, but yeah, hopefully that was helpful. Go check out the Trump course. We do analysis like that almost daily in the course member live stream, by the way. So you get that in the Trump course, in addition to the actual Trump-related content that's coming out. So you want to know art of the deal, play your Trump card, all that kind of stuff. I'll put my spin on it and break it all down for you. It'll be really fun. Anyway, rent a warehouse, says somebody in the chat here. Somebody says, big juicy TAM. Yes. Let's see here. Somebody says, that's why I invest in QCOM. Let the bots do the work. People can just go buy baby oil or something. Okay. Dadcoin says, Trump course just signed. Let's go. Thank you so much for joining, Dadcoin. Thank you for your impressive work, says Robin Space Hood. I love that. That's cool. Thank you for sharing this. Yeah, you got it. Let's celebrate their first super on a live stream. Do you offer? Oh, yeah, that's the one I answered already. A Tiffany. Yeah, absolutely. We'll have that in there. That's awesome. Okay, just a shout out to some of those of you who just joined. Tarina, Naveen, Robert, Venkat, Sergey, I'll have to work on your name. We'll work on that together. Dustin, Martez, Jay, William, Kevin, what's up, man? Andres bought the bundle, the Financial Advice Library and Trumponomics. And it looks like Sergey also got Trumponomics and the Wealth Library 99 extra there.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.